GM, welcome to Morning Markets. It is October the 2nd. We've seen October start off very bullishly. So, what can we expect from Bitcoin today? Before I get into the video, just to let you guys know, later on today, I'll be dropping another video. So that will be the monthly outlook for October. And I'll be diving into the super high time frame charts as well as a macro analysis, going through all the catalysts, risks, and narratives ahead in Q4. So stay tuned for that later on. But for now, let's dive into morning markets. Well, what have we seen on BTC here? So we have bounced from the high time frame support resistance level that I've been mentioning to you guys. If we zoom into the daily, what we formed here is the failure to return pattern. So that is where you set a low. You then set a higher low, which got confirmed yesterday after we closed above this high. So now we do have that confirmed reversal pattern. That is exactly what you wanted to see on BTC here to confirm this potential bottom. So from here, it gets interesting. And I want to start off by sharing with you guys this old chart that we've been going through. So this was the distribution volume profile for BTC. We formed this reversal pattern, as I said, failure to return, reclaim 110, got a lovely move, which we caught in morning markets. If you've been watching this, we then blasted through the value area low. And I mentioned yesterday that you want to see price be able to accept in this previous box of distribution here, this previous area where supply outweighed demand. And we did exactly that. We blasted straight through it. Demand absolutely overwhelmed a previous area of high supply. So that's everything you wanted to see. We're now above the POC, which is very nice for Bitcoin. And really, what you now want to do is go back to your daily and take a look at some support resistance levels ahead. So what I've done here is I've taken the volume profile of that distribution. I've taken the volume profile of September. And if you guys don't know, what the volume profile does is in this value area between the black lines, that is where 70% of the volume is traded within whatever price range you set. So that means it's where 70% of the buying and selling is done within all of this price action. So it's very interesting to tell you where buyers or sellers are likely to show up. And what I've done here is I've got a support zone here between the value area low of this volume profile and the value area high of the September volume profile. Now, I would expect this to act as interim support. So that's between 114.8 to 116.5K. On any dips here, I think that should be a buy. Now, if your interim support fails, we of course have the primary support. That is your high time frame support resistance level, which I showed you guys here. That's the level that bulls must hold. Otherwise, we do flip bearish. That would be confirmed. So those are your two levels. You've got your interim support and you got your high time frame support resistance level. And you can even grab a box here from the September value area low to the high time frame support resistance level and call this a general area. And that is where price could, of course, build another higher low if we do retrace this October move later in the month. So that's between 110 and 111K. So what you want to look for is any dips in that interim support zone to hold and look for longs and reversal setups. You don't want to see, of course, this Wednesday candle fill in immediately today or even tomorrow, because that would actually be a show of weakness. Instead, it would be much more bullish to see price actually chop around here before eventually coming into support. So let's say something like this. We see price continues to shop around this general area before coming down for a retest later on, potentially next week, into the interim support, and that would be the perfect setup, because of course you don't want to see something like this where you just get that immediate retracement. So if I get a better example, literally you don't want to see something like this where yesterday's candle gets immediately retraced, because that is of course bearish. That means all the demand in this candle got overpowered very easily, which shows a lack of support. So they're the two scenarios I'm looking at. If it's a sharp dip, probably not one to buy, because even if it doesn't break down, it's probably gonna just offer that lower high bounce before going lower. Therefore, what you really want to see is that previous example where you actually have a much slower and steadier dip. Something like this, of course, is not going to play out exactly like this, but the point is to show you the price behavior that you're looking for here. It's that slower consolidation into your support zone. Uptrends, they move like this. Impulse up, you then consolidate, otherwise known as a bull flag. You impulse up, and of course you can consolidate like this too. But generally, you're just looking for that lower volatility. And that's what I mean here, that lower volatility. That's bullish, as opposed to retracing the entire impulse candle very sharply. That then typically leads to downtrend continuation. So that's a quick little lesson there on trends, the nature of a trend. That's what I'm looking for, interim support. And if that doesn't hold, look at the primary support. And to the upside, well, we have 120K. This is the value area high of the distribution volume profile. You want to see price flip that level, because that means price is accepting above where 70% of the buying and selling was done within this distribution range. And the more we can accept above that level, which we've previously not been able to do on 1, 2, and you can call it 3 occasions with all of these overall wicks. Therefore, if you see it accept above it for a 4th occasion, it's more likely to actually start to break it. And that sets up a move to the all-time high. And from there, you look to see if we can flip the all-time high, of course, or if it acts as resistance and you see a reversal setup. But that's a way away, so we don't need to worry about that now. We've got levels to flip in between there. And that is that 120K level. So if you start seeing price trade above there, consolidate, well, that's going to set up a move to the all-time high. So that's what you're looking for. Alternatively, if we just keep on rallying, or if maybe it comes from later after we get that retest of the interim support zone. So perhaps something like this is what you're going to see. And then we get a move higher above 120 and you can trade the rest of that move. Or perhaps we just get it straight from here. Overall, 120K, that's the level to flip. You want to see daily closes above there. Ideally a weekly close even above there, but more on that in the monthly outlook video. And then that sets up a move to all-time high where we then reassess for continuation or reversal. So these are the levels I'm looking at on BTC. Clear plan laid out to trade in the coming weeks, and trade frequency definitely gonna go up now that we're heading into Q4. These are my highest returning months when I look back at my journals year on year. It's October, November, December, where almost the majority of your crypto returns can be made, especially in trading. So time to lock in and focus. Now going to the lower time frames. I got the Coinbase chart up because it really shows the ETF inflows, since Coinbase is their main custodian. And if we go to my video yesterday, what did I say? Well, I said volume's rising, volume's rising. This is harmony, so expect continuation higher, and boom, that's exactly what happened. We was at 116.8K here, and we got the move up to 119, as you guys know. So look, if you're enjoying these videos, guys, another morning markets analysis, absolutely nailed here. Please hit that subscribe button. Really appreciate you. We're at 120 subscribers now. I'm actually going to be screenshotting my first 200 subscribers to make sure I have all of the names of the OGs that supported this channel early on. So I do expect it to grow, hopefully, in the coming months. That's my plan. So make sure you hit that button, hit like, hit comment, boost up the algorithm so I can push this out to more traders and save you guys from the deep, dark depths of crypto YouTube, where, let's be honest, it's full of a bunch of people who don't even trade. So if you enjoyed the video, make sure to smash that subscribe button. Well, back to Bitcoin. Of course, we saw this play out from yesterday's video. I mentioned to look for a volume divergence, and we have started to see that now. So you're seeing on the most recent pushes, volume is declining, and the moving average was still rising during that time, so that was okay. But now we're seeing the moving average decrease. So while that doesn't mean the uptrend is over, as I mentioned in yesterday's video, you have to see some market structure breaks. You have to see price at least lose these H1 12 and 21 bands to say that the H1 trend is over. And at the moment, you've got a market structure level over here. So this is the level to hold so far on the H1. Now, of course, if we make a new high over here, then your market structure level is going to move up to here. But until then, this is your market structure level. As long as we don't close below there, uptrend is good for continuation on this time frame. Now, an early signal of this uptrend losing steam on the H1 would be losing these 12 and 21 EMA bands and crossing them red. And from there, the opportunity then comes to your lower support bands. We've seen the H1 bands holding, producing new highs, but starting to see volume declining, bit of a divergence here. Therefore, if you start to lose these bands, which gives you your price confirmation, remember, you don't just trade off the volume alone. You need price confluence with it. That's how you build your highly probable confirmation setups in your trading. If we get that and we lose these bands or we lose the market structure level, I'll be looking at this H150 EMA to hold as support, which will keep rising higher, of course. We saw that hold over here and over here, produce new highs. So if price comes down, wicks into there, then that would be an area where I look for a potential long setup. And if that doesn't hold, then on a deeper pullback, what I'll actually be looking for is this gap to hold on any dips. And that can be shallow, that can be deep, I'm not sure. The whole point is this general area where price impulsed up with a super high volume candle, the highest volume candle in this H1 uptrend, buyers should come in and support it. That's where demand was. Therefore, if you retest demand, it should hold as support. Otherwise, demand and that support zone is flipping into resistance, which creates a bearish setup. So for longs, I'll be looking at the 50 EMA to provide support. If we do lose momentum and start giving those price action triggers for a deeper pullback, and if that EMA fails, then I'm looking for this gap over here between 114.6 to 116 to hold on dips for continuation higher. So they are the low time frame long setups I'm looking at. And of course, this is the higher time frame plan that I'm looking at in terms of my trading. So that's it for Bitcoin. When we look at Bitcoin dominance quickly, what we're seeing is Bitcoin dominance is rising. Now it's nothing spectacular. Could take volume off here. It is coming off the lows, which is good to see. Again, I do want to see Bitcoin dominance continue higher. If this is going to have a lot of steam in the rally on Bitcoin, that is going to allow the wealth effect to build up and the maximum amount of profits to rotate into altcoins. If Bitcoin can actually have the spotlight and see new money flow into it, So watching this carefully, if it does roll over, then you're again looking for Bitcoin to potentially top out, because as you guys know from my analysis, when Bitcoin dominance starts falling, while Bitcoin is rising and trying to break out, typically those breakouts fail. So I'll show you guys an example here. So get the Bitcoin chart up on the daily. Now, if we look at, let's say, this breakout attempt over here, you saw on the 13th of August what was happening. Bitcoin dominance was trending down. So that means people are getting long on altcoins while Bitcoin is trying to break out. So that just means Bitcoin loses steam. Bitcoin needs the attention, it needs the focus to hold a breakout. And as I can show you some other examples, look at this ripping rally on Bitcoin that we got from 75 all the way up to 112. We haven't seen something like that in a while. Why did we get that rally? Well, it's because Bitcoin dominance at the same time was uptrending. It was going up. And look, when it came down, that's when Bitcoin then stalled and went sideways. And then Bitcoin dominance went up again and Bitcoin broke out to another new high. And then Bitcoin dominance went down and Bitcoin started failing breakout attempts again. So you really need to see Bitcoin dominance rise if you want Bitcoin to actually mark up to 130, 140K in a proper breakout. But of course, don't always get what we want. We don't get the ideal scenarios in markets. So just react to this chart and let's see what happens if Bitcoin continues rising. Now moving on to Ethereum. So mapped out a similar plan for Ethereum. We have the consolidation volume profile here, taken the volume profile of everything in this current range on ETH and got an interim support level here. So this is between 4.2K and 4.3K. This is the value area low to POC, so point of control, that red line, which is where the most volume is traded in the volume profile. So this is a high volume area, high volume zone, which I'll be looking at for ETH to find support on any dips in the interim. And of course, if that breaks, your primary support is the high time frame SR level at 4.1K. And that is, of course, the high from March 2024, which we've broken out from and since reclaimed. So that's your ultimate support level. If we lose that, then it confirms price is bearish. Therefore, that's your last support. And this is your interim support between there. Now, the resistance to flip is the value area high here. So that's at 4.6K. And if we actually do this, let's remove this for now to make it easier to view. So essentially looking for Ethereum to flip this 4.6K level. Previously, if you get the volume profile back up, we rejected, couldn't trade above there for very long. Rejected, couldn't trade above there. Rejected, couldn't trade above there. So you see, it's a very key level to start accepting above because previously sellers have showed up here every time. Therefore, if price can actually start accumulating above this level, something like this, where we see ETH actually mark up and start building a base above this level, well, that's going to show price is accepting, demand is accepting above an area where supply was accepting previously, which is a change of character. So very simple. You then look for a trend shift, which means price is probably going to mark up higher instead of going sideways and selling off from there. So that's what I'll be looking at on ETH. Flip that level, then you're looking at all-time high. And again, from all-time high, yet to be seen whether you can break it, flip it to support, or whether price is going to reject and form some sort of reversal pattern. We'll look at that later on if it comes. But in between there, watch for this level to flip. That's your resistance. And watch the interim support for high risk reward long setups. And if that fails, high time frame support resistance level is the ultimate support level for bulls to hold and keep the momentum on their side. So when we zoom into low time frames, I took some beautiful trades on ETH as mentioned. Go back to my previous video a couple days ago on ETH. I said ETH, look for support at the high time frame support resistance level. Mapped out a path here. we had the consolidation high, which we wicked into, found resistance initially, and boom, did that play out perfectly? Of course it did. And I added to that position when we broke above the consolidation high over here. So I've compounded this trade. I'd be looking to take profit on the gap fill. As mentioned, that was the first target. Of course, we do have the weekend liquidity above, which is also interesting. So just wanted to share with you guys some of the trades I'm taking. I will try to update as much as possible, but of course, when I'm day trading in and out, I can be holding a position for 30 minutes, 40 minutes, an hour, so it's difficult. However, I think if I show you guys these setups, some of the trade examples I take, it can potentially help you guys with your own trading knowledge and system. So just wanted to share that. This is the trade I've taken on ETH, compounded, and just don't want to see it close below this consolidation high level now. And I want to see it fully fill in this gap over here, which I'd been mentioning as the first target. And above there, you've got the weekend liquidity. So that's what I'll be looking at on ETH. That's what I'm doing trade-wise. Again, look at ETH Bitcoin. What are we seeing? Well, I mentioned to you guys, it is lagging behind Bitcoin. So Bitcoin has been the better trade. Those low time frame setups on BTC have been much nicer. You've got a beautiful move, creating that higher high now above this Thursday, 18th of September high. So market structure is looking good internally here on Bitcoin. And that is reflected on ETH Bitcoin with this chart being weak. And you really just want to see those daily bands flip green to then start looking at ETH again. But potentially as we head towards the weekend, you can see flows revert back to altcoins over Bitcoin since you don't have the ETF flows dominating, and that can lead to this chart going positive. So that is the full update. We quickly give a look at Solana. What are we seeing on Sol? So I think it will be more of the same. If we actually take this chart, this will have all of my technical analysis on it. So look at Sol here. Potentially it is this chart. There we go. So looking at Solana, want to see, of course, price just start to consolidate here, build a range. As I said, it's not bullish Solana here. It's not bearish Solana here. We simply had a move which went up and got fully retraced. But if you go to something like the weekly, we held at the weekly support. Weekly market structure remained intact over here. So from Solana, as long as we're above the yearly open, price is good. Bulls have the chance to reaccumulate here. And as I said, you're just looking for Sol to go sideways potentially. And from there, have a move higher once it gets to favorable rotations. And this can look like a compression pattern in the coming weeks. This is how these things start to form. So this is one idea, and that's all you're looking for. It's just consolidation on Sol. You want to see reaccumulation, and as long as it doesn't lose the yearly open, price has a chance to mark up higher if bulls can switch those weak hands to strong hands on this coin. But everything's good on a weekly standpoint. We're above the weekly market structure, didn't invalidate and disrespect it. So just looking for this chart to now build a new cause so we can get the effect later on. And that's really the full update for Sol, not as interesting as Bitcoin and ETH. And when we look at the wider altcoin market, so total free, excluding altcoins, looks good. Main level to now get above is this high. So we had a false breakout above it, led to a trap, which brought this flush, but this flush has found support at a higher low, low, higher low, higher low. So this is good structure setting up here. Now all you want to see is price close above the level, which it failed to break above, and that invalidates the bearish setup. And of course, the invalidation of a bearish setup is a bullish setup. So watch for price to close above this high over here on total 3. This is your altcoin index, everything excluding Bitcoin and ETH. And if it can close above there, then that likely sets up a move higher, which is going to be bullish for your altcoins. So that's what I'd be looking at in terms of total three. Now, if we go to ETF flows quickly, again, seen a lovely day from Bitcoin ETFs flowing in. That's why I showed you that Coinbase chart. Watch the New York session today. That volume analysis can change a lot once the ETFs start flowing in. So keep an eye on the volume harmony or divergence. You want to see volume rising as price rises, of course. And when we look at the Ethereum ETF flows, we're not seeing as much come in. So as I said, Bitcoin's got the favor right now. And ETH, its best chance to have favor is Friday night after the New York close going into the weekend, because then Bitcoin loses that ETF spotlight and that can actually lead to some focus flowing into your altcoins such as Ethereum. So that's what I'll be looking at there. And to wrap up, look at some quick data analysis. So checking out the order flow on Bitcoin. Very nice. As I said, you're seeing spot bid the price with perps. Now, this morning, we are seeing spot selling at the market and perps are buying at the market. So perps are holding it up. Everything in this box at the moment. So definitely at risk of some stops getting taken. Perfectly normal. As I said, your H1 market structure is over here. You then also have your H150 EMA band and this gap, which I mentioned earlier, as levels where I'd be looking for price to potentially find support. So those are the levels. That's your market structure, and any dips can just simply take out any of these lows, any of these stop losses of longs. They can get flushed in the New York session, find support before a markup. So these levels are definitely at risk since you're seeing perps hold up the market this morning. You can have just a quick flush before going higher. And of course, I laid out the other paths for deeper pullbacks and where to look for trend support at. So not too much of a build-up of open interest. So as I said, there's nothing major showing signs of over leverage here. It's just super low time frame this morning. You're seeing perps are holding up price in this box here. So you can probably get a flush lower just to wick out some stops and take some liquidity. But overall, open interest in this rally. It's up 3%, while price at the same time is, take it from here, up 7%, so it's healthy. There's no signs of futures bidding with too much leverage. It is, in fact, a short squeeze, which is why you see open interest falling so much during the rally. As I mentioned, a lot of this rally is fueled by shorts getting absolutely wrecked. Anyone trying to hedge their Bitcoin positions during this downtrend in late September is getting absolutely blown out, and they're just having to cover their positions, which fuels a rally higher. And it's yet to be seen where that's going to stall out and lose momentum. But currently, H1 trend still intact, so play it until it ends, and then you move to your higher time frames. Very simple. And of course, this chart, which I've been sharing with you all, hasn't this played out beautifully? As I said, above 112, you're in short squeeze territory because you've got all of this open interest build up. That's where bears are in danger, and boy, have we seen that. Bears are getting their asses handed to them. So above there, bulls are very good on Bitcoin. That is 112K. So that's the full update. Looking at gold quickly to wrap up. Breaking out higher. So gold looking good, staying strong. Just continues making new highs, new highs, new highs. So overall, long term, good for Bitcoin. These charts go higher together. They just have different cause and effect paths. You see some selling coming in at the wicks, which is allowing Bitcoin to actually outperform recently. Because as you can see on the lower time frames, price is dumping, consolidating, chopping sideways, which is what you want for Bitcoin. It's this beautiful uptrend in action, which leads to weakness on Bitcoin. So all good on gold. You welcome this chop, welcome this consolidation for BTC. And when we look at stocks, look at the daily. They made a new high yesterday. So risk assets looking good. As I said, look for this order block to hold and produce new highs. Look for those 12 and 21 EMA bands to hold, produce new highs. GM to that. Anyone trading stocks, beautiful setup. Now you want to see, can we mark up from this consolidation? So looks good. Markets are healthy. Q4 has had a bullish start. As I said, you get inflows at the beginning of a quarter from many different institutions and players. So you tend to see bullish flows as we head into what typically is the most bullish quarter for your risk assets, stock market and crypto alike. So that's morning markets. Remember, monthly outlook video is going to be dropping later today for a super high time frame view. Stay tuned for that. I'll see you in the next one.